What does the future of multifamily real estate look like, and how can opportunity zones help us move into that future more quickly and in tax advantaged fashion? I'll discuss this and more with my guests next. Welcome to the Opportunity Zones podcast. I'm Jimmy Atkinson. Joining me on the show today are two executives from Altus Capital. From New York City, we have Jeff Tompkins. He's the Managing Director of Investor Relations. And joining us today from San Francisco, California is Julian, Senior Portfolio Manager of Real Estate. Jeff, Joseph, great to have you both on the show today. Welcome. How are you guys?
Great to be here. Yeah, thanks for having us.
Good having you both here today. Excited to dive in. Jeff, you just presented at OZ Pitch Day Spring 2025 back in March 2025. So our audience may already be somewhat familiar with Altus Capital. Actually, I want to ask you about OZ Pitch Day in a moment, but first I want to turn to Joseph and get a little word from him about, despite the fact that some of our audience might be familiar with you guys, maybe some are new to the show or haven't heard of Altus Capital yet. Tell us a little bit about you and Altus Capital.
Oh, thank you. Thank you, Jimmy, and thanks for having us on. Yeah, early 2000s, I met my current, founding partner, the two of us who founded the firm, Brian Altenberg and myself, early 2000s, and we were both working in the Man Group, Brian out of London, myself out of Los Angeles, in the alternative space. So we were looking at everything, real estate, real assets, private equity, private credit. We kind of were generalists at that time, working and building out the platforms, and then later moved to some other institutional platforms that we helped build out at Citi, B of A, Bank of America, Merrill Lynch, and then later through Oppenheimer, sort of 2010 till around 2015, and then we were backed by a large single family office, had a lot of real estate they needed us to manage. So we spun out and worked together the last 10 years, pretty much in this area of commercial real estate, especially multifamily, some e-commerce, logistics, industrial. And, as of today, we've launched two Opportunity Zone funds, and we'll look to launch a third one later this year, which we're very, very keen on, concentrating on multifamily with mixed use in some of the growth areas of the country. So we've done pretty extensive projects in the middle market space, sort of 50 to 150 million per project, Washington, D.C., Charlotte, Austin, Tucson, Orange County. So that's really been our focus. And we like the opportunity zone structures for people with cap gains who want to have tax efficiency and optimize their net returns. So this is, we feel this is the perfect medium for real estate development, as we're long-term real estate holders. We're not flippers, so we like the idea of a 10-year hold.
Yeah, it aligns perfectly with your strategy, it sounds like. And I like that key phrase you used, Joseph, net returns, because it's not about what you make, it's about what you keep at the end of the day. So OZs are a terrific structure for that, as my audience is well aware. We love the Opportunity Zone structure here, obviously. I want to talk more about OZ Fund 1 and OZ Fund 2, some of your properties in there a little bit later in the show today. Maybe we'll get a little sneak peek of OZ Fund 3 as well. But first, Jeff, I want to turn to you. A moment ago, I mentioned you were on our OZ Pitch Day Spring 2025 event earlier this year. What was your experience like?
Yeah, thanks, Jimmy. It was a great experience. My nerves were a little bit higher than usual, being a first timer, but I think it was really great to see a community come together to share ideas around best practice when it comes to opportunity zone investing, as well as sort of trends in the market. So there's certainly the opportunity there to see some specific projects in opportunity zones, but some of the panels as well had really valuable information, I think, around the mechanics of opportunity zones, the legal and accounting considerations for opportunity zones. And, I have to say, this is the first time in an online conference where I had folks texting and emailing me during my presentation. And there were some messages in the chat room too, so incredibly interactive. So kudos for putting together a really great event.
Well, thank you. I mean, that's our flagship event here at opportunityzones.com, and been running that one since 2020. So yeah, the audience there is always great. They're folks who are specifically interested in learning more about opportunity zones, a lot like this audience on this podcast here. So thanks again for sponsoring the show and supporting us. And it's great to hear from you. Today's episode, we're going to talk about the future of multifamily. We're going to get to that in a moment. But Jeff, want to turn back to you again here for a moment. Just kind of curious with respect to OZ investing and what Altus Capital is doing, what makes your firm's approach particularly unique?
Yeah, I think there are really three ways that we look to differentiate beyond being a diversified national multifamily fund. We really look across the three categories of sponsor, geography, and property type. So in terms of sponsor, we work with sponsors that have a long track record, billion-dollar plus balance sheets that can can really manage any kind of financial headwinds that future markets might bring, experience in the property type. As Joseph can talk about, as he gets into some of the properties in Fund 1 and in Fund 2, these are sponsors we've worked with in the past. In terms of geography, we're really looking for those zip codes with pent-up demand and constrained supply. I think I shared last week, nationally, Zillow projects a shortage of 5 million homes and growing. Freddie Mac projects that to continue through the end of the 2020s. And the National Multifamily Housing Council is estimating that we need to build another 4.3 million more apartments by 2035 just to keep up with demand. And so, when you look at the geographies that we're focused on, areas where there's high compression and demand for workforce housing, for example, these are the types of geographies we really like to focus on. And then in terms of property type, we love multifamily, arguably the most risk-averse category for commercial real estate, because people obviously need a place to live. But we're really focused on projects that have a lot of environmental perks to them: walkable park areas, amenities, open spaces, entertainment, live, work, play environments. And I think the team at Altus really does make the effort to differentiate architecturally and spatially in the types of projects that we get into. And Joseph can talk about Camp North End Kinship. Really has an attractive look and feel to it that's attracting a lot of outside small businesses. And we think that in the long term, this will also help to optimize for risk, because in downturns, those are the last places to typically get hit because they're attractive and maintain their value. So, those are kind of the three 30,000 foot view ways that we differentiate. And I think as Joseph talks about some of the specific projects, you'll get some more granular examples of that as well.
Yeah, I want to hear more about some of those specific projects a little bit later in the episode today. But Joseph, turning to you just to answer our big question that I teased in the intro, what does the future of multifamily look like to you?
We've kind of concentrated on what sort of environment does a person want to, if he has choices to rent, what would be his requirements? And a lot of what we think the future is more of a live, work, play community. So there's walkable, it's energy efficient, so the cost of running the buildings are attractive. And then you also have jobs nearby and a walkable community, parkland, open spaces, all of these things, because people would rather have a sort of walkable community environment as opposed to just, living in a high rise next to a freeway and having to, drive miles to get to city center or something. So we concentrated on these MSA adjacent areas, unique communities where people can walk to shops for food and drink, and even have, jobs within a mile, couple mile radius of where they live. And we've done that in DC, Charlotte, Austin, Tempe, Arizona. These were really interesting areas where we think the future is going to be that type of environment.
And Jeff, a moment ago, mentioned workforce housing as a key
Yeah.
component of what you're doing. Why do you like workforce housing?
There seems to be a real demand on these areas of job growth, and the typical demographic is, call it 18 to 35 years old, and they need, they're going there for a job. They need nice accommodation, but reasonable. And we feel there's a real demand in that area of the market. So workforce housing, we also include in that, 10 to 12% of affordable rate in the buildings that we do. So that's sort of helping having some, lower cost, but good quality buildings and environments for people to rent. Yeah.
And Jeff mentioned a moment ago also he pointed to some key ways in how your properties are differentiated. Can you go through some highlights from some of
Sure.
the investments that you've made across your first two OZ funds, OZ Fund 1 and OZ Fund 2? Give us a couple of examples of some projects that you're proud of.
Yeah, so in Tempe, Arizona, this is just, less than a mile from ASU, but there's a light rail there. But it's the first car-free environment called cul-de-sac. And that is really, I think, the most unique. Now it's become a model for other cities to have an area where people not going to be dependent on cars. This gives a better environment because you don't have to build as much parking, and they can keep cars either outside, or they don't need to have a car to live there. There's also electric bikes, Uber, Lyft kind of thrown into their lease of their apartment, as well as they can walk to the grocery store, coffee shops, yoga studio. All these things are within the 17-acre site. So that makes it, I think, pretty unique. In Washington, D.C., we invested in the first net carbon zero building. So again, very efficient for energy. It'll be the largest one in the US. And it'll also have, again, that environment. So the blue line is right near the building. So they're a mile and a half from the Capitol building. They don't need a car. They can use public transport. And then there's parkland along the river right outside their units. So they've got a really nice environment for dog parks and hiking, jogging trails and all of that, which I think is pretty unique. Yeah.
Yeah, that Washington D.C. building, the net zero building that you mentioned, I believe the sponsor on that is Red Brick. Is that
Yes.
correct? Can you tell me a little bit more about your experience working with them, and what you like about partnering with that team over there at Red Brick?
Yeah, very smart team of three partners. We've known 10 years, like when they started, we were early JV investors with them. They're the largest landowner of Opportunity Zone land in DC, and have built there for the last 30 years. They've been building residential area and developing the refurbishment of the US Navy Yard, which is another huge project they're doing out there. Got completed. They started working on it in 2016. It's another thing we've invested with them. So we've done 4 projects. Our first one was a build-to-suit medical offices in DC, in an area where there's just no medical services around, in the Bridge District, just south of the Anacostia River, across the Frederick Douglass Bridge. In that area, It's called St. Elizabeth's East. We built a beautiful, award-winning, further grants and support from the local government. So yeah, they've been fantastic to work with, both on doing stuff that looks great, has a great environment, and award-winning for energy efficiency, and blending in with the community, sort of getting a lot of community support. Yeah.
So they've been a great partner of yours. I'm sure you'd like to have JV
Yeah.
partnerships look just like that one all over the country. What do you look for in a sponsor or JV partner before you start investing with them? What are some
Yeah.
key elements you look for?
I mean, we like a lot of local experience. So there are people on the ground and they know particular geography very, very well. Like Red Brick are very experienced in Washington, D.C. We have another group that, they've been building in Austin for 50 years. So they really know that local area. The judge came out to our groundbreaking, and they've got good kind of relationships and track record with all the local GCs and support people. So we look for, not only just experience in particular area geography of the country, with a long-term track record, and relationships there to get things done, get them approved, but also good transparency. So they're very open with us. They give us access anytime we want a weekly lease up report or anything like that, or when we're in construction, we're getting updates on a very frequent basis. So all of those things are important. Deep hands-on knowledge of a particular product type. So if they're building garden style apartment, we know they know that, how to optimize the cost. So our investors we're de-risking a lot of the construction in terms of them having owned the land, usually no debt on the land. They usually have all the entitlements in place, surveys completed on their side before we get involved. So we like to see that they have good stability, surety of the income on the lease up risk. So they've worked with the right property management people and have those relationships. And then on the exits, that they've sold things in the past to REITs or pension funds and people who want stabilized after the developments have been done.
A lot of good qualities to look for in a
Yeah.
partner, for sure. So you've given us a little bit of a peek behind the curtain at some of the assets that you're holding in your OZ Vintage Funds 1 and 2. You're about to close OZ Fund 2. I got to ask, is there an OZ Fund 3 in the works potentially? And if so, what will your approach be there? Will it be different than the approach in the first two funds, or are you just going to keep on doing what has been working for you for the most part?
I think it's a continuation. We are looking at a couple different locations like Albuquerque, Clearfield, which is just 25 minutes from Salt Lake City in Utah. Another area, a project we're looking at in Colorado Springs. So we'll continue to find these areas where there's been a lot of jobs coming in, not a lot of good workforce housing available, where we can see a runway. But the philosophy, I think the product types, may be different. Albuquerque is a build for rent, single family homes. So that's a little bit different than multifamily, but it's also still a build for rent residential. We will also, continue with some of our same sponsors. So for example, cul-de-sac I mentioned in Tempe, Arizona, we've now just stabilized phases 1 and 2, and there's phases 3 and 4 that'll be built. So that's another thing we can continue on. We've had a good experience. It's been on time, on budget. They're leasing up 12% above what we projected for the lease rates right now. And we think that, that'll be more demand in Phoenix. 30,000 jobs are within 3 miles of the place. And you've also got, as you know, about the Taiwan Semiconductor coming into Phoenix with even further developments. So all of that is great. So we'll probably do more in Phoenix. Camp North End is 76.5 acres. It's probably the largest reuse project in the United States. We've built the first 2 residential buildings, Kinship East and West. That's in funds 1 and 2. There'll probably be a third and a fourth building for residential on that land because there's a lot of land there. All the amenities are already in place. So there's retail, there's shops, there's co-working, fully leased out. Google Fiber are there. There's a mile and a half from the financial district of Charlotte. Vanguard's moved into Charlotte now for, I think, 2,500 new jobs. So we'll probably do more as there's some projects in planning there. But that's sort of a glimpse of what we would do in Fund 3.
That's great. Good sneak preview there. Appreciate your insights there on that one. I want to turn back to Jeff here before we wrap up the show. We got just a few minutes left, but Jeff, before we hit the record button, you and I were talking a little bit about OZs and timing and why you think this current moment in time with the macroeconomic environment the way it is, why this might be a great time to get started with opportunity zone investing. Why do you believe that? Why do you believe that now is a good time to be an opportunity zone investor?
Yeah, I think there are a couple of reasons that really get to the point of what's happening at the macro level, why it's a good time with regard to multifamily. And there's a really interesting technology piece there that I'll kind of weave into the answer. But you know, that shortage that I talked about kind of graphically, if you could visualize that deficit of estimated 5 million homes by Zillow, is that kind of developer's dream trough on the graph, right? Like it's when you're looking at kind of moving ahead, we also see very robust rental market projections alongside that. And you know, given the volatility in the capital markets, I think a lot of investors are looking for more conservative investments, and particularly something like opportunity zone programs, which has so many advantages. But the point I wanted to get to about future of multifamily, Jimmy, has to do with, you know, Joseph talked about cul-de-sac and how developments like cul-de-sac have been able to incorporate smart technology experiences for the residents, integrate providers in the sharing economy like Uber and Lyft. And we see a virtuous cycle here where there's not just a draw to the tenants from integrating things like smart technology, but the use of smart technology by property managers and leveraging some of the emerging trends in artificial intelligence can have some really beneficial impact to the long-term property as well. So, you know, we're seeing things like virtual reality and immersive technologies enhancing property viewing experiences. And we're also seeing where technology is impacting the future of multifamily by streamlining property management and enhancing resident experiences. So we think of things like smart homes, integrations, and advanced property management tools where you can really predict resident behavior and optimize rental pricing to help property managers stay ahead of the competition. So we see that all of that kind of comes together to say that, like, as these new AI applications are coming in on the property management side, where demand is in the market, and some of the volatility, we think at 2025 is a great time to enter into opportunity zones.
What a time to be alive. And I love opportunity zones myself. Jeff and Joseph, it's been a pleasure speaking with both of you today. Before we sign off, Jeff, I'll turn to you again. Where can our audience go to learn more about you and Altus Capital? Maybe we've got some sponsors listening who are interested in potentially pursuing a partnership, or maybe we have some families or individuals or RIAs who are interested in learning more about investing in your firm. Where can they go to learn more?
Well, first of all, Jimmy, I would send them to opportunityzones.com to check out last week's OZ Day videos. I think that does a great job of describing Altus and has a downloadable presentation there as well. But of course, they can come to our website as well, Altus Capital, and that's ALTES capital.com. And we would love to have a conversation. I think one of the ways that we add value is in the service and support that we offer, not just to individual investors, but also to wealth managers, accountants, lawyers, and helping to educate their clients about opportunity zones. We would love to be of service in that regard as well.
Terrific. And for my audience out there, I will, of course, as always, have show notes available on our website at opportunityzones.com/podcast. And there we'll have links to all of the resources that Jeff, Joseph, and I discussed on today's show. And please be sure to subscribe to us on YouTube or your favorite podcast listening app to always get the latest episodes. If you're watching us on YouTube right now and you liked this episode, give us a thumbs up. Would really appreciate that. Jeff and Joseph, thanks again for your time today. It's been a pleasure.
Thank you.
Thanks.